So let's look at basically what we provide currently, and then we're going to go into our new development. So we provide coverage on stocks, ETFs, indices, futures, and crypto. We are the only company that also provides gamma levels on futures by looking at futures options. So that's like a very big key differentiator for us. And basically, in the next few months, we are also going to start covering European futures like the DAX or the Euro stocks and the spot crypto options. So looking at actually not the futures data, but looking at the actual spot crypto. In terms of product, we basically already provide access to our quant models. We're going to show you some of those, some of the new stuff that we are doing. We also have access to our gamma levels, our blind spots levels, our swing trading levels. We also integrate, as we saw, with 10 plus applications, and we also have a very extensive academy with about 500 hours. So by subscribing to Premium, you can access all the academy. And then, of course, with our Pro membership, we also give you access to our trading coaching. So if you want to be actionable and learn from professional, you can also access those sessions. But let's go into who uses MenthorQ. So who is our customer, and how can MenthorQ be used? So the first thing is a futures trader, right? So if you are a futures trader trading NQ, ES, CL, you can use our gamma levels on futures to be able to be actionable in the market. If you are a stock trader, you can use our levels, but you can also use our models by looking at positioning, right? If you are a swing trader, so let's imagine that you are not live in the market, you're not day trading, and you want to just use data to potentially build 20 days position or maybe longer term position, you can also use our data. If you are an option trader, you can use MenthorQ. And of course, if you are a day trader, you can use our levels, our indicators to be actionable in the market. Let's look at some use cases. So these are some examples taken from last week. So last week we saw a very big sell-off, and then we also saw like a massive rebound towards the end of the week. So this is a screenshot of our gamma levels from Friday. So if we look at the NQ, in this case, we can see basically how the price kind of stopped at one of our key levels coming from our option data. And obviously, if you missed the first entry, you could have got a really nice opportunity later in the day, and the price just skyrocketed all the way to our 1-day max, closing right below the 1-day max. Right. So this was a 400-point move on NQ. So very, very crazy moves right off our levels. This is an example by looking at treasury bond futures, right? So this is coming from Friday. Again, we saw also this a very important move coming from our put support all the way to our core resistance, so from level to level. So this is, if you are a bond future trader, again, this is levels that you can use on your chart every morning. If you are a forex trader, these are the levels on the Euro FX future. Again, from 1-day max all the way to our JAX level. This is data coming from Friday, so you guys could have access all these levels, and they update every day. If you are a stock investor, so if you trade stocks, or if you even do options on stocks, let's look at a couple of examples, right? So last week we saw CRM, so Salesforce reported earnings. Earnings were bad. Obviously, we saw kind of like a decline. So before the earnings, what you see at the top right is our skew chart. We can see that we were in a very, very put bias environment. So here at the top, and you could have used that to understand the sentiment before the earnings. We were also in. This is by looking at our Q score at the bottom right. We're going to present this in a second. We were in a very high volatility environment, so that could have been a good strategy to use options. Low momentum, and of course neutral seasonality. And then we can look at our swing model right there, right? So we can look at our swing levels. The market dropped, but as you can see, basically the market did not go past our lower band levels. So if you were, for example, an option trader and you wanted to use spreads, you could have used our model to forecast where the price could be at the end of the week. So this is the levels for Friday. the stock, even though we had bad earnings, did not close below the levels that you see here on the chart right there. So kind of like these are like 3 of the models that could have helped you understand what could have happened with a company like Salesforce, reported earnings, and of course, NVIDIA, right? So what you see here, and we're going to present this, is the Q score on NVIDIA, where we see our seasonality chart. As you can see, when we had a very positive seasonality, this was the start of a new rally a few weeks ago. And now we went in negative seasonality that kind of like anticipated the strong downside move that we saw last week. You can also overlay that with our skew chart. As we can see, there was a very, very put bias environment ahead of the earnings. Of course, the market was worried. They were bidding on put protection. And as you can see, kind of like you see how the chart moved towards the end of the week. Although the market drop, we can also now look at our swing levels, and we can see that basically they were actually respected. So even though we were in a very negative kind of like environment right there, the swing levels actually provided like a very strong support toward the end of the week.